Hi, everybody. Thank you for taking your precious time to be available. It's 7 p.m. Without further ado, let's start. Today, we'll be having a webinar on application of trading tools. Firstly, here are some important notes to be aware of. Okay, I'm Troy, and it's the moderator for today. We will first have Chan Kin from Digital Engagement Team, and he is covering on trading tactics. On the later part, we will have Elaine from Digital Platform Team, and she will be sharing on the functionalities of the iOCBC online trading platform. For now, let's welcome Chan Kin, please.
Hi everyone. So very good evening to everyone. Thanks so much for the introduction, Troy. So I'm Chan Kin, a CK, Markets Analyst here at OCBC Securities. Those of you who have joined us for some of our previous webinar sessions, you would have seen me also talk about technical analysis and all of the other back to basics as well. So that's what we're going to be doing tonight. Actually, this is the 5th webinar that we'll be having as part of the Back to Basics webinar series. So previously, for the past 4 months, we have actually been talking about why trading matters, why look at trading instead of investing, perhaps. We also looked at technical analysis, things like trend lines, things like support and resistance levels. And tonight, actually, the goal of everything that we will talk about today is to put everything together and to make it applicable for you. So what we'll be doing is actually not just looking at support and resistance levels, but also how we can apply that using our very own iOCBC online trading platform as well. So this is going to be, first of all, a recap before we dig into the application of trading tools tonight. So previously, what did we cover about when we looked at technical analysis? And that was a 2-part series. First of all, we looked at the tools of technical analysis. So we looked at things like chart patterns, trend lines, resistance, and support. But there was a portion of last month's webinar where we actually looked at some of the common sayings when it comes to trading. And all of that actually was touching briefly on the concept of risk management. So when we are actually looking at technical analysis, that only helps us get an idea of what the charts are saying. But if we actually want to put our money where our mouth is, then that's where a lot of other concepts such as risk management come in. And that's what we're really going to be focusing on tonight. So the first part of tonight's webinar, that's the part where I'll be sharing, is actually talking about how we can plan our trades. So understanding the concept of risk and reward, understanding things like trading tactics. When you talk about things like breakouts, what does that mean? Understanding things like money management and how we actually, things like risk and reward ratios, things like diversification, they can all come together to help you trade and trade effectively. So putting everything together, combining with what we have covered in some of our previous webinars. And those of you who are joining us for the first time as part of this series, you can actually check out these webinars on our YouTube channel. So actually there are replays available if you have missed those sessions. The next part of this series is actually something that we have gotten a guest speaker for, which is from our digital platforms team. Her name is Elaine. I'll introduce her later. But she will be using the platform and screenshots of it to actually share with you how all of the things that we have talked about in the past 4 or 5 sessions, how we can actually put it all together using our very own iOCBC online trading platform. So she'll be explaining some of the tools out there, how to chart using our platform, how to do things like place your orders, and that would be very, very applicable to all of you who are looking to place your first trade. So again, back to basics, looking at helping you make your first trade, being confident and knowing how to really use the tools available to you out there. So without further ado, the first section, which is all about trade planning. And we start off actually with a quote. So what did George Soros, the renowned investor trader, what did he say when it comes to trading? Did he say, as long as you are more right than you are wrong, that is all that matters? Well, the fact is actually, this is not what George Soros said. What did George Soros say? He said, it is not whether you are right or wrong, but actually how much money you make when you're right and how much you lose when you're wrong. So end of the day, the facts speak for themselves. Whether you are right, whether you are wrong, that's secondary to actually how much money you make at the end of the day when it comes to trading. And here's a statistic for you that actually comes from one of the very well-known technical analysis books out there written by John Murphy, which we have taken some material from. And he says that actually even the best futures traders out there, make money only on 40% of their trades. So how can they make a living? How can they make a living out of trading when they're only correct 40% of the time? So one of the oldest maxims of trading, which we will refer to, is actually how traders have this saying that says, let your profit run and cut your losses short. And the heart of this actually, along with what George Soros says, is all about managing your trades, managing your risk, managing your money. I attended one of the sessions by one of the well-known technical analysts. His name is James Brody, and what he said before actually is how you can look at making small profits, you can absorb small losses. You want, of course, as all of us do, to make big profits, large profits, but what you want to avoid is actually making large losses. So the mentality behind such sayings by industry veterans is all about managing risk and reward. So first off, a quote by John Murphy, Chief Technical Analyst of StockCharts.com and also author of many well-known technical analysis books. So what he said is any successful trading program must take into account three important factors: price forecasting, timing, and money management. First of all, price forecasting. And that is really what we have covered over the past 4 sessions. So looking at things like news, things like what's the macro environment, how's the stock doing based on a chart and technical analysis, that helps you get an idea of whether or not it's going to be bullish, whether or not it's going to be bearish. So price forecasting helps us with in terms of what to do. So buy or sell. Next, the other two factors that actually John Murphy talks about is money management, allocation of funds. So money management actually helps us with how much to commit to a trade. So price forecasting is what to do, buy or sell. Money management tells you how much to do it. And lastly, trading tactics or timing, that actually tells you specific entry and exit points, and that is when to do it. So tonight, we'll actually be focusing on the two bottom, the 2 pointers that you see on your screen, money management and trading tactics. So first up, what is money management? Well, the definition given by John Murphy here is actually money management covers the allocation of funds. So it includes things like portfolio makeup, diversification, how much to invest, so things like your risk and reward ratios, the use of stops, as well as what to do after periods of success or adversity, whether you are trading aggressively or conservatively. So that is quite a mouthful, but actually some of the principles behind money management is really how to allocate your funds and what factors or what considerations do you have when making such decisions. So first off, some pointers that are not exhaustive, but perhaps for you to think about when you want to make a trade. Some things to look at when it comes to capital preservation. So for example, to limit or set a cap on the amount of money you put into a position. Why so? To guard against adverse events. So think about it this way. You could be that potentially unlucky trader just before the March 2020 COVID crash, and you would not have known such a black swan event would happen. But because you manage your risk, you might be able to avoid significant downside. Similarly, for a degree of risk, that's something for you to think about to ensure that you don't lose the amount of based on the amount of risk you have, to ensure you don't lose more than you are willing to. And this is to ensure that only a certain percentage of capital is at risk at any time. You do not want to be one of those people that wipes out your entire portfolio because of just one bad trade. So lastly, position sizing to help you understand probabilities well and also to determine the amount of money that at the end of the day you put into a trade. So to help you manage your risk by managing your position sizes. And why do we really need to understand and manage risk in this way? Well, there's a saying, and this is not the only guy that said it. Benjamin Franklin is one of the famous Americans, right? But he's not the only one that actually said such a quote, which says, by failing to prepare, you are preparing to fail. So what's happening here is when you actually manage your risk and you actually plan your trades, that helps you to be more successful because you know what exactly you're getting yourself into. And there's a saying that goes, when you are trading, you have to be aware of what you are doing. You can't just be emotional. You can't just base everything on gut feeling as well. So this is just part of that as well. Managing your emotions, managing your trades. So broadly speaking, actually, when it comes to managing risk, there are 2 areas or 2 levels which you can manage your risk. And the first level is actually at a portfolio level. So several pointers, again, non-exhaustive, but several pointers that you can take away from tonight's session when you think about making that trade is how you can manage your broad portfolio and how trading can come in to help support that as well. So the first pointer over here is the pointer about diversification. And this is one area which traders also look at. I'll share some points about it later as well. But diversification is one way to limit the certain amount of risk that you take at a portfolio level by committing only a certain amount that you're comfortable with to a trade. So it can be done on an overall portfolio level, and it can be done across different sectors, across different markets, all to help you spread out your eggs. So don't put all your eggs into one basket, but actually to spread them out. The next pointer is about trading in multiple units. So a very simple example is, for example, you want to trade in a stock out there and you buy 100 shares. So if you want to reduce your exposure and you're able to trade one share at a time, say in the US market, then if you want to downsize your position from 100 shares to 90 shares, you are able to do so. On the other hand, if the lot size is 100, so you're only able to trade in blocks of 100, then it's an all or nothing approach, and that might make managing your risk difficult. So trading in multiple units is something that you can take away very easily to help you try and understand how to position yourself when it comes to different markets and different stocks. Now, lastly, also at a portfolio level, it's all about trading psychology. To keep doing what you are doing and to understand what works and what doesn't for different stocks, different markets, and for yourself as a trader as well. So think about it this way as something that you do constantly to kind of refresh your approach, to refresh your view on a certain stock. And ask yourself these questions. Are the macro trends, are the technical trends, the fundamentals, are they still the same? Is what you're doing something that works? Or is there areas for you to tweak a little bit given the changing environment or the different trading environment for that particular stock that you're looking at? So what works for stock A might not work for stock B. And what works for you over this period of time might not work for you the next period of time as well. So it's managing that psychology, managing all the emotions as well, and looking at it at a portfolio level to help you be a bit more disciplined in your trades. Now, we talked about things at a very broad level, kind of a portfolio level, but actually at a trade specific level, there are also certain things that you can do to look at risk and reward and to manage your trade as well. So the first thing that we talked about a little bit earlier is actually this idea about risk and reward ratios. And a very simple way to look at it is just how much risk are you taking and how much potential reward can you get out of it. So based on the earlier statistic, actually, 40% of the time, right? That's the statistic that shows you how many trades are winners, how many trades are losers. So to get away, to get ahead of that, actually, is to take a look at how, in terms of each trade, how much risk there is, how much reward there is, to determine whether or not that trade is worth doing or not. Now, together with that is actually the whole concept about position sizing as well. And for position sizing is just putting a monetary value to that. So how much money are you willing to lose in a certain trade? And that will determine your position size as well. And lastly is the idea about protective stops. So when it comes to protective stops, it's sometimes a bit of an art, sometimes a bit of a science. And you can use other tools that we have talked about in previous webinars, such as technical analysis, your support and resistance lines as well. So there's a saying, right, that unrealized profits are not profits. So something like a protective stop can help you to actually protect your gains while also prevent overwhelming losses. And this is something that needs to be determined by you, how much risk you're willing to take. The trade-off being, if you are too close, you might risk having a lot of noise and hitting your stops unnecessarily. If you're too far away, you might receive a larger loss. So this is all dependent on the trader. But at a trade specific level, these are some tools or some pointers for you to take note of that can help you with your decision making at the end of the day. So this is a slide that really just shows you some of the tools out there. This uses TradingView, which we will be also exploring later together with the digital platforms team. But there's a tool out there, risk reward ratio tool. And traders look at risk reward for an idea of potential upside against potential downside to see whether or not a trade is worth placing. So for example, this is an example, I think, using the US dollar against the Sing dollar. And if you have a target price based on maybe technical analysis and also a stop loss level, again, based on technical analysis, what you can do is very easily calculate your risk-reward ratio. So in the next slide, I will show an example of how position sizing, risk-reward, all of that really comes in together. So together with me, we're going to be fund managers right now, and we're going to be looking at a trade. So imagine you have an account size of 250,000 and a maximum account risk you're willing to take of 5,000 per trade. So what kind of trades can you do looking at the chart over here? And assume that you are, at this point in time, wanting to buy 100,000 shares at 50 cents each. This stock chart is for Yang Zixiang. It's a historical chart, so it's just for illustration. But imagine with me right now, you want to buy 100,000 shares at 50 cents each. And you are willing to take a loss of 10% over here. So you put your stop loss at 45 cents. That makes sense, right? Because that means that your total trade risk is actually 5 cents loss times 100,000 shares, or 5,000, which is up to your maximum account risk. Now imagine if me that same trade or that same account, what you want to do right now is at this point in time, in the red words, you want to buy 100,000 shares again. But this time, Yang Zijiang over here is at $1.75. And again, you're willing to take a 10% loss. So you put your stop loss at the next level, which is about one of the support resistance turn support levels as well that you have in mind. But in this case, actually, because of the price of the share, you cannot actually size your position the same. Because if you take that 100,000 shares as well, your trade risk is 18 cents times 100,000 shares, and you are actually risking a total of 18,000, which is more than what you are willing to do at this point in time. So position sizing helps you with that such that you are able to buy the correct amount of shares. And so you're actually risking the same amount of money in terms of dollar value in terms of percentage as well. So several practices when it comes to money management, and these are just principles for you to take away. And if you have any questions at this point in time, actually do feel free to drop it into the chat. Otherwise, also reach out to your trading representatives, because I know this is quite theoretical and you might have certain questions for specific counters that your TRs will be able to actually better advise you on. But some practices for money management, when it comes to managing your trade and managing your money, what are certain principles to keep in mind? First of all is in terms of total invested funds. So how much are you willing to actually deploy into the market? And the idea of this is really to have a cash reserve for periods of adversity or opportunity. So for example, if you have only 50% or you're willing to only invest 50% of your total capital into the market, that means that when there's opportunity, you can actually deploy additional capital. Whereas if you're 100% all in, then you're not able to do so. The next point is actually committing to any particular market. And so this is the same principle as when it comes to diversification as well. So not putting all your eggs into one basket. The idea of this is really to prevent yourself from placing too much into a single trade. So you might have a lot of conviction into a certain trade, but it's also about discipline when it comes to trading. Similarly, when you talk about the total amount risk in any one market, so not just any one trade, but any one market as well. So for example, if you diversify yourself across all the FANG stocks and they move together, then that diversification doesn't work that well. Whereas if you buy maybe into the S&P 500 across different sectors, maybe diversification will work a little bit better. So same thing, total amount of risk in any one market, total margin when it comes to a total market group or particular sector, all of this to prevent concentration, to help you manage how much you're willing to risk, and also together with position sizing and the risk reward ratio, how much you might potentially gain out of a certain trade as well. So we use this example of NetDragon in one of our previous webinars. And back then, it was all about technical analysis. So this actually came from the previous technical analysis webinar slides. And this is an illustration how you can actually put everything together. Technical analysis along with risk reward, along with also trading tactics, which will be in the next slide. So NetDragon back then, for those of you who forgot maybe, what we ran through was how we observed NetDragon at that point in time to be in a short term, maybe 2 to 3 month uptrend. It was hitting a significant resistance level and consolidating for the period of about 1 month. And you can see the significance of this level because it seems like there's some major price action at various points in time at this level, at the $20 mark. Next, we also notice because it's been consolidating for a while, the moment there was any good news, and in the case of this example, it's actually about an analyst upgrade, there was a huge spike in volume and it gapped up and went to the next significant level, which is the yellow line that you see on the chart. So with all this technical analysis put together now for you, how do you then translate that into an actual trade? So combining everything with the technical factors out there, when it comes to trading tactics, there are various tactics. So one tactic is actually trading on the breakout. So maybe at the red line when it was consolidating and you have information or you have your analysis and you decide that, okay, it might break out. That is one potential area for you to place your trade. The other is after it has actually broken out and maybe it's at the yellow line right now and you feel like there's some momentum and so there's a breaking of the previous trend line. You can also use support and resistance highlighted in the chart. The use of maybe retracement, you feel like, okay, it's gone very aggressively. Now it might be a time for a pullback. The use of gaps as well, the significance of opening up higher. So the questions then to ask yourself, where do you enter? Where do you place your target price? Or where do you place your stop loss in case you are wrong? So what happens when you are correct? Or what happens in case you are wrong? What's the risk and reward ratio for you? So there's no fixed answer in this case because there are different people with different tactics and it really depends on you and your risk appetite and your trade plan. So different traders act differently depending on your time horizon. For example, the same chart over here, the same stock over here, everyone can observe the same things. But if I'm trading only on an intraday basis, my behavior will be very different from someone who's intending to buy and hold it maybe for 1 week, 2 weeks, or maybe even longer. So the idea is really to find a trade and tactic that works for you. And after that, then re-evaluating it and seeing whether or not, sticking to the plan works or whether there's anything to tweak. So some questions for you to ask yourself when it comes to trades, whether or not the stock has already hit your target price, whether or not the big macro picture has changed or the trends or indicators have reversed, whether or not there are any additional support or resistance lines, whether or not it's at a 52-week high, 52-week low, and what comes and the implications that come with that as well. So what do you do if a stock hasn't performed as you expected, or you observe some changing market sentiment or buying or selling patterns as well? End of the day, what many traders do as well is they stop, pause, and reevaluate whether or not they got their read of the market right in the first place. And end of the day, the facts are the facts. So whether or not you make money, whether or not you lose money, whether or not you got your trade right or wrong, the market will tell you at the end of the day. So put it all together. I know it's been quite theoretical and quite a lot of information. So I hope you're able to digest that as well. And I'll be just sharing a few more slides before I hand over the time to our platforms team to share with you how you can put it all together on the platform as well. So some additional tools for you to consider before I hand over the time. First up, the types of orders that are available out there. So the most common orders out there are market orders and limit orders. Market orders being at the market price, limit orders being placed at a specific price, which can be at your support or resistance levels as well. So market orders are useful and they are more sensitive and fast reacting, but limit orders allow you to get potentially a better price. Also, it could also mean that you might not even get the stock because your order might not be filled. So it does depend on what kind of trade you're intending to do. Next, and I touched on this a little bit just now, we look at time frame. So how you would behave really depends on what kind of time horizon you're looking at. So whether or not you're looking at intraday trading or whether or not you're looking at maybe even an investing buy and hold strategy, that would determine what kind of tools you use and what kind of time frame you're looking at. Now, lastly, for my section, we'll be looking at market depth and breadth. And these are also available on our platform, especially for SGX stocks. So market depth refers to helping you, a tool that helps you see actually where other orders are placed. Market breadth refers to how the broader market is performing. So an example is our S&P 500, where in the US, because of the S&P 500 heavy weight to FANG stocks or tech stocks, that typically gives you kind of a different kind of movement in the US. So for example, the whole S&P 500 could be moving one direction, or 595 stocks could be moving in one direction, but if the FANG stocks, the heavy market cap, move in the other direction, then that might not truly reflect in the stock price or index price of the S&P 500. So looking at market breadth to see how broad the market is moving allows you to actually get some insights out of that. So I won't go into too much detail for this because I think it's quite a mouthful. You can find your trading representatives actually for more information. And right now, actually, I'd like to pass the time over to Elaine. And Elaine is actually from our digital platforms team. And she'll be sharing about how, based on what we have shared here, as well as the technical analysis, we can actually use the platform on our iOCBC trading platform to help you actually perform your trades or use it effectively. So Elaine, over to you.
Yes, thank you, Chankin. I will now walk you through the functionalities of the trading platform. So basically, our trading platform has features. Can I have the next slide? Our trading platform has features such as the search function, where you can enter the stock symbol or stock name in the search box, and clicking on See All Results will allow you to view all your stocks. Next, you can also select the market that you wish to trade in from the drop-down listing, for instance, HKEX market, and choose to view by top volume, top gainers, top losers, top gainers percentage, or top losers percentage as well. Next, please. You can click on watch list to manage your trading and can save and edit up to 10 watch lists, maximum of 50 stocks per list. You can also customize your watch list view by either reorder or deleting the rows or even removing the columns. We also have the charting feature in our trading platform, where you can actually view the chart in an expanded version by clicking on Open in tab. So the next few slides will show you the features of the expanded chart. So in this expanded chart, you can select from a wide range of charting tools to analyze trends and find opportunities. You can also compare the various stocks side by side to see the relative performance. Next, please. There is also a massive library of technical indicators you can choose from. For instance, moving average. From this slide itself, you can also display the charts in custom interval, such as 1 day or 5 days. For this particular expanded chart, you can also screenshot and save the chart with just a click. Now, next, I will go on to the order placement in the trading platform. For placing of orders, there are pre-built checks in place to ensure that your order is within the valid lot size and price range. Next, after the orders are submitted, you can have an overview of all your orders in the orders page. There is also color coding to distinguish between your buy and sell order. So for instance, blue color is for your buy order, whereas red color is for your sell order. There is also a detailed order log so that you can really follow the progress of your order. In terms of your current orders, you can actually have several views. You can choose to view your active, failed orders, unsuccessful, or all orders in this screen. Yeah. Lastly, you can also view your past orders according to your desired time frame, be it 3 days, 1 week, or even 1 month. So in our trading platform, all the trades performed by yourself will be captured in your portfolio, where you can monitor it anytime. You can also have the option to view the profit and loss and market value of your portfolio. In addition, we also have the market statistics feature in the trading platform. So for instance, you can have an option to view the bid and ask, the Q track, the trade summary, and type and sales data feeds under the market statistics section. So next, please. Lastly, you can also have access to Stock Report Plus in the trading platform, where you can actually search for stocks to really obtain more insights, as what you can see from the screen. And there will be additional information such as earnings, fundamental, risk that is available in this Stock Report Plus as well. Yep. So that's the end of my presentation. I will now pass the time to the next presenter who will walk you through the rest of the slides. Thank you.
Okay. Thank you both, Elaine, for sharing of the trading platform and Chankin for your trading tactics. So the team produces trading reports frequently to keep you updated with the latest market developments. For simplicity, we divided into two categories, weekly and monthly. I'll go into details in the next few slides. For weekly, we have single stock highlight and podcast. We are currently building an AI-assisted stock highlights, where AI will generate trading ideas through technical analysis. So please stay tuned for that. For monthly, we hold webinars just like today. We also have news focus, top 5, and traded journals. You can find all our reports at iocbc.com, or you may scan the QR code here. Don't worry if you cannot scan the code in time. The code will still be available in the next few slides. If you attend one of Chankin's previous webinars called Why Trading Matters, you should be aware that what is stock-specific news. Our team will highlight two different stocks a week. It can be from US, Hong Kong, Singapore. The highlight will give you both technical and fundamental perspectives. At the same time, you can identify trends and key events that could affect the stock prices. For macro view, the team has news focus published at the start of every month. This reports helps you stay connected with the latest news flow and thematic. Hence, you get to know the events that may impact the markets. For top 5 report is published at the start of every month too. It helps you gauge the market sentiments for the month. These stocks are top 5 traded in OCBC Securities. Hence, you will be able to watch what your peers are trading. For Trader's Journal, the report is published at the mid of the month. The team gives a commentary on major market movements and recap on the past productions. So basically, it's the summary of what happened and then position for the future events. So we have two series of webinars. One mainly on educational content, which is back to basics for beginners traders. Another one is mainly for actionable market developments, which is trading matters with Sam for experienced traders. You can access our live webinars through the iOCBC webpage. So we always receive, we always receive tons of questions asking whether the webinar will be uploaded. After careful considerations, we have decided to share it on YouTube for those who cannot make it in time for the live webinar. So, we are on YouTube too. Please do videos posted. We are also on Spotify. Please take a screenshot and follow the steps. Do click follow and do click the bell button to stay updated. We have two upcoming webinars. Do jot down the important dates. One is on 4 July, which is Trading Matters with Sammy Wong. Like always, he will share about the macro fund flow of the markets. Another one is on 18 July, which is Riding on Uncertainties and Market Volatilities. Sam and I will give you a sneak peek on the Trading Matters series. If you have any other questions, do contact your trading representative. And so, we have come to the end of the webinar. But before you leave, please fill up the feedback form. Also, thank you for staying throughout the webinar with us. Have a good night.